valuation provisions as per the Reserve Bank of India Act and as per the FEMA regulations. Now that is the topic which we are going to cover. Remember at the outset, any transaction that involves any currency of the world other than Indian rupees, that transaction will need to be examined and valued for the purpose of compliance with the FEMA regulations. And I'm sure you can very easily understand the reason and purpose for such a situation. And that is because if the payments of the foreign currency are done or the payment of foreign currency are received, if proper care is not taken, then lot of malpractices can be done by unscrupulous people. Thereby, there can be a drain of India's precious currency in both ways. And that is the reason why you have the FEMA 2000 applicable in case of this country's all foreign forex related transactions. So please remember, management of forex reserves is very critical for any country. It has to be earned and more and cannot be allowed to be drained by anyone. FEMA was enacted with the objective of facilitating external trade and payments for promoting orderly development and management of exchange in India. It has been brought on June 1st, 2000 to deal with any of the following transactions. So transactions between residents of India and non-resident, transactions of residents outside India, and transactions by non-residents outside India. And remember, these transactions can be on account of the current account or they can be on account of the capital account. So in principle, what we are saying, as and when there is an outflow or inflow of foreign currency in or out of the country, the FEMA becomes applicable, and valuation will need to be done in all such cases so as to ensure that there is no drain out of the India's precious foreign currency. As far as the FEMA is concerned, when does it become applicable? As I mentioned, it becomes applicable the moment you have any transaction where there is a inflow or outflow of foreign currency. All the transactions today, because we have today a liberalized regime, and therefore all the transactions under the FEMA are of three categories. Number one, transactions where prior approval is required. That means if you want to do a transaction, and everything is listed under the FEMA regulations. So if you do a transaction which requires prior approval, that means you cannot do this transaction unless and until you have an approval received from the Reserve Bank of India. Second is permissible under the automatic route. Automatic route मतलब आपको approval लेने की जरूरत नहीं है. Automatically you can go ahead with that transaction. The only condition is that there are certain reporting requirements. So, and the reporting requirements, I am sure you can understand, is for the purpose to ensure that there is a proper accounting of the inflow and outflow of the foreign currency. And the third is permissible under the automatic route without any reporting requirement, and that is where you will have the minimum of the transactions where the reporting is not required. Virtually for all the transactions which are done under the FEMA, even if they are under the automatic route, the reporting is required. A requirement of under FEMA, issue or transfer of shares by a this I think I have mentioned already, so I'm going to skip this slide. What we need to understand is valuation needs to be done by a chartered accountant or a SEBI registered merchant banker. So which is same as in case of the SEBI. तो SEBI में भी आपने देखा कि the valuation could be done either category 1 merchant banker or by a chartered accountant with 10 years of experience. In case of FEMA also, it is the same. But let me tell you, in view of the valuers bill, which is already there, it has to become an act now. As per that bill, once that bill becomes an act, there will be only one valuer, and that is registered valuer as per the IBBI, and he will do all the valuations for under all these statutes. So two broad groups of situations where valuations will be required under FEMA. Number one, valuation in case of inbound investment, as we discussed. So whether there is an inflow or outflow, and second is outbound investment. So in both these situations, the valuation will be required. So basically what we are saying is valuation will be required under FEMA when there is an inflow or when there is an outflow, or when there is inbound investment. So when there is inbound investment, that means there is inflow of foreign currency coming to the India, and when there is outbound investment, and the outbound investment meaning when the funds are going out of India. So any question, any doubt before we move further?